we are going to take off with headline number one. And that is that Casper Sleep announced on Monday that it will be taken private by Duration Capital Management in a deal that values the mattress maker at roughly a 94% premium to Friday's closing price. So the transaction is expected to close in the first quarter of 2022. And as part of the deal, founder and CEO Philip Krim is out to be replaced by their current chief operating officer, wonderful woman, Emily Orell. She will be their new CEO. Chad, let's go to you first on this one. What are your thoughts here? It's been making a lot of headlines this week.
So first, it goes to show that the boring old business fundamentals and metrics of things like cash and profit actually matter. I mean, this is a company that was once valued, perhaps mistakenly, at 1.1 billion, IPO'd around 14 a share. And this acquisition is valued at $690 a share or sub $300 million in value. Yeah. And it's a 2-year turn at being public, right? So in a way, this had to be done. They needed to stem some of the losses felt by their private market investors, even if it didn't make them whole, while, and perhaps most importantly, taking the company out of the public eye. Now, what's interesting about this is Casper never really had a lack of consumer resonance. They solved for a fundamental flaw in the consumer purchase journey and took the complexity, confusion, and friction out of mattress shopping. It's never been a pleasant experience. They marketed it very well, and they didn't have an issue with growth. But what it shows is that a great consumer-oriented business model doesn't always make for a great shareholder-oriented business model. And that's the lesson that I feel that all these young, disruptive, fast-growing, what we call DTC brands need to see. Because are there really even DTC brands? I mean, look at Warby Parker, half of its revenue comes from stores. Look at Harry's, you find it across major grocery and drug chains. DTC is a channel, and Casper learned that the hard way, obviously fumbling with the way they did direct. And in a way, they got disrupted by the very business model they sought to disrupt, which was wholesale mattress buying. So path to profitability, you can't hide from that.
I love what you just said there, Chad. They got disrupted by the model they just sought to disrupt. That is so awesome, because that was kind of my take on this whole thing too. Like, I think the expression I use is it's finally got revealed that the emperor has no clothes, in terms of what was going on here. And I've shared this anecdote before on the show, and you've probably remembered it, but I can remember when Casper came, into being, and I was running home furnishings on Target.com at the time, and we were selling box mattresses, but no one was buying them. And then all of a sudden this company starts selling box mattresses, and I'm going, what the hell? We've been selling these things forever. It's the same damn thing. And these guys have just marketed it and branded it, and they've kind of convinced everyone that there's this friction in the buying process. But at the end of the day, there's not really anything to it. It's kind of an inferior product, honestly, if you want my opinion. I know Ann may disagree with that, but it's kind of an inferior product to the traditional box spring mattress. And I think, to your point, it shows the fallacies of going direct when wholesale in this category is really experienced customers want, because you want to be able to try out your mattresses up against a lot of different other options for the most part. And going direct, having your own stores instead, just doesn't make sense in the long run. So yeah, I thought the way you said that was brilliant.
Abhinav, what about you? Do you have any thoughts on this one too? You throw in?
Yeah, I will build a little bit on what Chad has said. And I'm going to talk in terms of 3 buckets. One is the financials, which Chad was referring to. The second one is the business model. And the third one is some operational things. So on the business model, on the financial front, I mean, liquidity is an issue they've got. I mean, they made in the last quarter, they made 156 million in revenue. Revenue was up 28.6% or something like that. And then their profitability, net margin, they made a loss of 25 million, which increased from last year, which is mind-boggling and kind of partly explained by the fact that they are facing supply chain issues as well. But it is not sustainable. The cash on hand went down from 90 million to about 40 million. So liquidity issues there. And so that's why the company had to go and get funding from outside. I mean, it is needed. The second part is around the business model. And in the DTC world, mattress is a unique category, because if you think about mattress, you don't buy mattress every 2 months. You buy mattress every few years, if at that.
Mhm.
And so every time you have to acquire a customer on the DTC side, it's not like there's huge amount of customer loyalty that is sitting around there. So that's part number one. Part number two is, if you think about the purchase price, it's an expensive product. It's not a $5, $15, $20 t-shirt you are buying. And so, yes, there is going to be a set of people who are going to buy DTC, but as you said earlier, you would want to see the product, feel the product before you buy it. So you have to be in the wholesale or in the retail channel. So they themselves now have, I think, 70 plus stores, and they are selling with Target, and the revenue that they have in their, I think, wholesale channel is actually higher. So they are moving back to the point that Chad made. They are getting disrupted by the model that they were disrupting. And the third piece around this is that as they are moving into the retail channel where they are selling through partners, their margins are lower. So they are growing in a lower margin business. So they are already making a loss. And then the portion that is actually growing fastest is the one which is even less margin, or where they will make more loss. So, I mean, it is needed. I don't think they are out of the woods, but that takes me back to the operational side of things. And I think so then why did private equity buy it at the end of it, if the picture is so bleak? My point of view is that if I look at their cost structure, something is wrong between either the pricing or the cost of manufacturing the product, because their gross margins are just so low. Mm-hmm. And my hypothesis is that the PE firm has looked at it, and they have said, okay, we'll take them out of the public eye. We are going to tighten the belt and get operationally right and get the margin right. Going back to Chad's point, you have to make a profit. And I think that they see a path where they can reduce their cost, or they may be able to increase the price to get the profitability right. I think that's why they have gone down this route, but the jury's out.
Yeah, I agree. I mean, I think your last point's a really good one too, in that, you know, this is something that all D2C companies should be paying attention to, not just mattress companies. And there's not going to be a private equity firm that's going to come out to save your brand either. I think that there is some validity to the Casper model, the business model, once the belt gets tightened a little bit, to your point, Abhinav. But I think everyone needs to be paying attention to this. And the D2C players need to be thinking about D2C as a means to an end. Like this, you need to get your big audience around you. You need to be able to then take all the information, see where you're actually selling your product, so that you know when you are going to go into stores, if you are going to go into a wholesale relationship, you can go into those meetings and say, look, I know I already have an audience in these places, and this is like the value of that D2C upfront getting into market.
Yeah, I mean, I think we'll move on to the headline 2 here too, but I think the other part I would bring into this equation as the merchant is like a mattress in a box on a shelf at wholesale, like at a Target or a Walmart. It's just not that appealing of a product. Mm-hmm. And so it makes me wonder, you know, how much staying power there is to this, especially with so much competition in this space, which I think goes to the point Abhinav was bringing up in terms of the margin pressure too. There's a lot of people offering the same type of thing now.